Welcome to ISE's Equity Index Weekly Outlook, a weekly outlook on ISE and other industry indexes, hosted by Patrick Ceresna, a derivative market specialist and investment manager with extensive expertise in options and the broader derivative markets. ISE trades options on more than 15 proprietary sector indexes, as well as broad-based indexes and a variety of licensed benchmarks. ISE continually enhances its trading systems and develops new index options products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to the ISE Equity Index Outlook for March 21st, 2011. This is Patrick Ceresna. As always, we start off with a chart of the S&P 500 using that SPDR exchange traded fund symbol SPY. We were overall over the last 2-3 months looking for market highs to come in around this 134 to 138 level on the upside. And while we certainly rejected off that level, we certainly will not rule out the possibility that April and May, maybe even into June, has the market come back up into those zones for a couple more retests along the upside. So we're certainly going to be watching that blue box zone probably for the entire second quarter of the year. Overall, we were looking for a market correction, and we really got it underway when that Japanese earthquake occurred. More or less, when we said any break of the 130 level will have that market correction get underway. We now certainly have moved all the way down to about the 126, 127 zone, which I now made an adjusted focal point at. Really, how does everything play out from here? Well, because this is an event-driven catalyst, especially about the uncertainties of how bad the radiation will be, and certainly the military action in Libya and other things like that that are creating the short-term uncertainty. The one thing we are expecting that when that uncertainty stabilizes, at some point the market will have a robust counter rally that will probably bring it back to its previous highs. So now the one thing though we don't know is whether or not there's one more leg lower. If the situation, let's say in Japan, gets worse before it gets better, then this after a little bit of a bounce, so long as we stay below 130, we can't rule out even a test as low as the 122 to 123 area on the downside. But as soon as the catalyst and these different events come to an end, whether it's off of this existing level where we already based, or whether it comes off the 122 to 123 area, we do anticipate that at some stage the market will probably head right back to its previous highs, if not even make a higher high in what will be a bigger picture topping formation developing over the second quarter of the year. But what was uncertain at this point is whether or not we first have one more leg lower or not before that rally occurs. Next here, I want to take a look at the ISE US Regional Banks Index, which is a symbol JLO. Had a little bit of a pop on Friday with the Fed allowing the banks to start resuming their dividend payments. And so as a few of these companies announced dividends, the markets bullishly popped these regional banks higher. I drew a little bit of a descending trend line there. If we have any bullish follow through above this trend line that actually holds, and particularly if the whole market's rallying, then the regional banks should easily push right back to their previous highs around that 2650, 27. Just waiting for a little bit of technical confirmation, but if the whole market stabilizes, then regional banks should do relatively well on any rally back. Next here, I want to take a look at the ISE Syndex, which is a symbol SIN. This is an index of all the casino, tobacco, and distiller companies. Overall, we've been bearish on this, looking for new downside moves. We had a very strong accelerated breakdown move that really accelerated last week. It found a short-term low around this 120, 122 area, but their bigger picture supports actually lay all the way down at the 115, 117, and certainly will not rule out one more leg lower on this index. Overall, we've been talking about a market correction that needed to occur, but at some point the Syndex will stabilize and probably have a strong counter rally, maybe not making it to its previous highs, but if the whole market does bounce, we do anticipate this is a sector that will bounce with it. Next here, I want to take a look at the ISE Home Builders Index, which is a symbol RUF. We draw a descending trend line downwards this way to kind of mark off the entire wedging formation lower. This 950 to 970 held very well last week in spite of all of that aggressive selling. The home builders really did not sell. I find that particularly worth noting and observing, as if the market counter rallies, the fact that the home builders never significantly dropped last week may be a sign that they're being accumulated, which means that counter rally higher could actually occur not only up to the 10 to 1020 area, but if we have any bullish price action get above that green zone, then actually would mark the beginning of another full rally higher in the home builders. So it's too early to be already trying to call that trend, but if we see bullish price action above that 10-10-20 area, we'll start looking for bullish scenarios. Next, I want to take a look at that ISE Natural Gas Index, which is symbol FUM. It has held up very well along the downside supports as it's rallied back all the way to its previous highs. If we have any bullish breaks on the upside, we'll have to start looking at the measurements as to where on the upside we could target for this natural gas index. Interestingly enough, natural gas as a commodity has given some sort of signs that it may in fact be reversing. If in fact we do see a short-term low on natural gas in place and the commodity itself rallies, it may actually be enough to spur this index to actually not only make a higher high, but to maybe even target some levels at 145, 150 on the upside. Finally, I want to take a look at that ISE Mini FTSE 100 Index, which is a symbol UKX, and more or less we were stuck in that trade range for a better part of 2 months between the 590 and 610 area. With that technical break last week, it came all the way down to our 555.60 focal point on the downside. This is where we anticipate a short-term low to come in. That should be in line up with the S&P 500 somewhere along those zones. But if the whole market has one more leg lower, we could have a couple of little tests below 550, maybe one quick test down to 540 with a quick return back up into that zone. But overall, we see probably some short-term lows coming in on the FTSE along these downside. Now, if there's a failed rally attempt that rallies all the way back to 590, it can't make it back above and rolls back down, well, then we'd have to look at new downside targets, maybe even as low as 520 on the downside. But we're not going to make that kind of a forecast till we see how the price action develops over the next week. That was your ISE Equity Index Outlook. Thank you for joining me.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free index options trade alerts, visit www.optionsource.net. To learn more about ISE index options, visit us at www.ise.com/indexoptions.